Keep in mind that just because we use the word auditors in a financial statement environment, it doesn't necessarily mean that all auditors perform exactly the same function. The word auditor is basically someone who checks up on something else or provides assurance about something, and it's not limited to the finance profession or to the auditing profession itself. So we need to keep in mind that there are different types of auditors. Two of them that we're going to look at here is the external auditor and the internal auditor. The external auditor is blocked in red because that's what we'll be focusing on in 2601, and the internal auditor we need to be aware of, but this is not what we're going to be focusing on. An internal auditor works for management, works within a company. So a company will employ internal auditors to work within their company. And the reason for this is that the directors at the very top of an organization, you can imagine a very large company, lots of people, different branches throughout the country, they put policies and controls in place. So they say every time we buy assets, we need to go through this process. Every time we make sales, we need to go through this process. This is how we're going to control money and make sure that nobody steals from us. All sorts of controls that they put in place around how the company should be run. But since they are directors and they have an enormous amount of work to do and there are so many people working for them within their own company, they would like to have some kind of assurance about the fact that the policies and controls that they put in place are actually being followed through on. So we talk about internal audit being an internal management function, and they are employees of the entity. We say that they report to management, and in truth, we expect them to report to the audit committee, which is technically an independent committee on the board of directors. We don't have to worry about that so much. Their job is going to be whatever the board of directors says that they should be doing. To some extent, I always explain it like they're internal control police. They come around within the company and say to people, your job is to do ABC. Have you done this? Do you do this all the time? Let's take a look at this. Let's see whether or not you actually follow the procedures you're supposed to do your job. They are independent within the organization, which means that if internal audit department is auditing or is reporting on the finance department, they don't report to the finance department, they report past it. So they shouldn't be reporting or answering to anybody in the company that they are supposed to be reporting on. But that does not mean that they are independent of the company. They can never be independent from the company itself because they're paid a salary by them. So to be honest, we can talk about them as being objective. They need to be objective within their role, but they will never be truly independent in the way that we are as external auditors. They do provide assurance because they give a report to the directors and say to them, we've checked, we've gone through, and we believe that the people within your organization are following controls that they need to. So that is your internal audit department. For the external audit, we will perform the statutory audits. We are not employees of the entity. We are not paid by them as employees. We do not belong to the company at all. We report to the shareholders rather than to management, and what we do is governed by legislation. We've looked already at the company law, and the APA we'll be looking at. We are independent of the organization itself. We have nothing else to do with them. We don't own shares in the company. We don't work for them. We're not invested in the company. We haven't given them finance. The only thing they do is appoint us as auditors and pay us our money in order to do the audit itself. We provide assurance. We talk about the reasonable assurance. We've spoken about the level of assurance. So we as auditors, we are entitled, we have to be completely independent. And again, this goes back to our diagram in the beginning about the three-party, the auditors sitting in the middle, and we have the directors who are preparing the financial statements on the one side and the users on the other. Because again, we've spoken about our position of trust in the middle here, we've got to make sure that we are completely independent of the organization. Otherwise, the users will not be able to rely on the information that we have audited.